Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 2 of the Forex market review, the very first one for 2017. Firstly, I would like to say thank you to everybody who was a member and a supporter back in 2016. And anybody who's coming forward, I hope you all the success for 2017. We're going to look back on some of the older trade setups that we're currently using. These have been very successful for us. So moving forward, we're going to continue to take these trades using divergence to find when a trade's ending and the reversal pattern. We're also going to be looking at another trade setup, which is the harmonic pattern setups. This is from one of our affiliated sponsors. You can take a look at our website at www.saininvestmentsolutions.com and go to the training courses section, and they're right up there as the experts when it comes to pattern recognition. So we're going to look at that, focusing on 2017, just to give us a bit more trades. Without any ado, let's jump straight to the charts. So as discussed, the first thing we're going to look at is the Euro Aussie on a daily time frame. So what we want to see is the move up higher, and we see it touch this 200 EMA on the daily chart. So firstly, we expect to see some resistance at that level and hopefully a push back lower, which we're starting to see. On the 4-hour chart, we want to see our normal divergence with our higher high in price and our lower AO. And so that indicates to us, because we see the divergence, means the price is going higher, but less people want it. And it's also hit the daily 200 EMA line, which we saw. We see it's now pushed back lower and bouncing off this 4-hour line. As it's pushed back higher, this was our buying opportunity. So we would drop down to the 1-hour chart. We look for our wave pattern. Here we see the start of wave 1 coming down, push back up for wave 2, all the way down for wave 3, and the pullback for wave 4. So we know this is wave 3 because we see this large AO here. And when it comes to the 0 line, we look at the low point and we follow it back to the beginning and look at the high point, and we roughly know that's the start of wave 3. Using our Fibonacci retracement tool from the start to the end of wave 3, we need to see that minimum pullback of 38.2%. It's hit that, as well as the 200 EMA line on the 1-hour chart this time. So what we're looking for is a push up, down, break through, and then a push down through the 200 EMA line for an entry. So if you're looking for an entry somewhere around here, you probably would want at least a 50 pip stop loss if you're having a very tight stop loss, or somewhere a bit higher, maybe 100 pips for if you want to be a bit more conservative. They definitely want to look at getting out before these bottoms or bring it to break even. So down to those bottoms about 100 pips. So if you were a very aggressive trader, you've made your 1 to 2, so you would have been out of this trade. But if you're like me and you're a bit more conservative, you've got your stop loss up here. It's come down to these levels, it's pushed back higher and back down. You've now considered bringing it to break even, and you're looking to drive it down to these lows down there. Why do we want to drive down those lows? Well, we use our Fibonacci expansion tool from the high to the low and then back up to the high again. And as we can see, the place of resistance is this DSR indicator, which is also the 100% Fib expansion level. Euro USD is the opposite direction. So we're seeing it push down on the daily chart, and now we're seeing it push back higher. We can see this large AO here. So it's likely come down for 3, coming back up for 4. On the 4-hour chart, we see our lower low in price with our higher AO. So we see some divergence. So lower low in price, high AO. Again, we want to see that push back higher. It's finding some resistance on this 200 EMA line on the 4-hour chart. Dropping down to a 1-hour chart, we look for our wave pattern, up for 1, down for 2, up for 3, down for 4. Now 4 is coming to this 1 hour 200 EMA line, so that's going to act as support. And as long as we've got our minimum of 38.2% fib retracement, so from low to the high, which we do. The reason why I'm taking this point here this time instead of this point is because on the Euro Aussie it came down a lot more, so it definitely looked like a 1 to 2. So because I'm not 100% sure this is a wave 2 pullback, I'm going to start it from the beginning. But because of also this 200 EMA line, you want to make sure they sort of match up. So that's where you want to look for an entry. You then see the push back higher. You would take a position, having your stops very tight if you want to. 50 pips again. You're looking at bringing it to probably break even now that it's getting up to these levels here. So if you did bring it to break even, you might have got stopped out at break even. Or if you're like me, you're playing a bit more conservative. You've got about 100 pips stop loss, or probably about 90 pips, I think mine was. So I'm wanted to break up to roughly these highs here before moving it to break even. And then where do I think it's going to go? Again, grab your Fibonacci expansion tool from the low to the high, back down to the low again. And I believe it's going to come to this DSR level as well, which is the 100% level. So roughly around there. Now, if you got in around there, you probably can make at least 200 pips. So 100 pips stop loss to 200 pip profit. There's your good 1 to 2 risk to reward. The last trade we want to look at using the divergence and support and resistance trade patterns setups is the oil trade. So we've seen this push back higher, some resistance at the DSR zone, and it's starting to push back lower. It's very likely it's going to find some support around about there, bouncing off that 200 EMA line. On the 4-hour chart, we see what paradoxically could be an A, B, C pattern, or a 1, 2, down for 3. May find some support now off this 200 EMA line. Using our 1-hour chart, here we can clearly see 1 up for 2. Remember, wave 2 can come to generate a minimum of 61.8, which it has, but it can't break the highs of wave 1 or the start of wave 1. It's now pushed back down lower. We then grab our Fibonacci retracement tool for the wave 3 pattern, and what we're seeing is a pullback to the minimum of 38.2 and hopefully somewhere around about where this 200 EMA line will be. Now originally when I was looking at it, it was here, but because it didn't come back to the 38.2, we just keep dragging it, and we really need to see this AO come back to the zero line. So when this AO comes back to the zero line, we put this at the lowest point. Hopefully it's done some type of zigzag pattern, come back to the minimum of 38.2, and it's probably coming close to this 200 EMA line on the 1-hour chart, which is pushing back lower. Then we look for our entry. And if we indicate it somewhere around these levels here, we're probably looking for about 100 pip stop loss to 150 to the bottom. So you can make a good 1 to 1.5 risk to reward down to the bottoms down there. Where do we think it could go? Grab your Fibonacci tool, do from the lows to the highs and back up again. So just let me just grab all those tools around. So that's the start, that's the low, and we expect it to come back somewhere around there. We then zoom back out to the 4-hour chart. So first point of resistance is going to be around the 61.8. And if you're looking here, it may find some support at this daily DSR zone, and then coming down to here. As I said, it could push all the way down to these levels here, but I wouldn't want to be risking that. So if you could make a 100 pips stop loss and look at bring it to there, make around 300 pips, that's a 1 to 3 risk to reward, and that would be a fantastic trade on the oil trade lower. Now looking at the pattern recognition trade, you can go purchase this software, which I have. And what I've done is I've put an X just to quickly identify while we're running through this video. But what you do is with the pattern recognition software, you go ahead, you click the draw button, and then you just left click and release, and then you just draw it. So you go from X to A, then left click again, and then it says A to B and left click again and go to the top, and it should say roughly where the X is down the bottom there what type of pattern setup it is. But because it's not mentioning a pattern here, therefore it's not a pattern according to the Fibonacci ratios. So at the moment you can see it's a bat pattern, and then it's saying it's a cipher pattern down the bottom there up to this point, but once I go up to here it's moved too far, so it can no longer be a cipher pattern. I then delete that. I then redraw it again, and I look at this impulsive leg all the way up here, and I say X to A, and come back to A to B, and it says, okay, well, it could be a cipher or a bat. Up to B to C, it's saying it's definitely a bat pattern, and bring it all the way down to here, and then it automatically snaps into place, and it gives me my entry, stop loss, and take profit areas. So as you can see, if I entered here, I would have had a stop loss of around 18 pips, and then first target area is 24 pips and second target area is 38 pips. So you're probably risking around 18 to make over 32 pips. So there's a good 1 to 2 risk to reward if you were to take half your positions off here and half positions off here. But if you're going to the full length of take profit 2, then definitely you can do more than a 1 to 2 risk to reward. So this is what's great about this software. It automatically clicks into place, and if it doesn't mention the word, what type of harmonic pattern it is, then we just ignore it. On the Euro Yen, again, we grab the tool, we hit draw, we click from A to B, or X to A to B, it's saying it could be a cipher or Gartley, B to C, it's saying it's definitely a Gartley pattern, and then it clicks into place, and there's our entry. Here we would have entered, and then we would have got stopped out. So you can't win them all, but it just goes to show that if you entered here, you definitely would have been stopped out, but that's how easily it draws a pattern. And why is it a different color? Because it's now pattern number 2, because it remembers pattern number 1 here. Until I delete that pattern, it's going to keep remembering the pattern and drawing a different color so we don't get confused. Next one is on the pound yen. So if I draw it all the way down to this move here, so I'll go all the way to the lows, so from the highs to the lows, X to A, back up to the highs again, A to B, saying could be a butterfly, B to C, it's still saying it's a butterfly, and then you move all the way back here. So what's it saying is if this was to pull back to this level here, then we could expect an entry on a pound yen butterfly trade using this type of setup. So we'd want to see this price pull all the way back up to there. If I want to delete it, I just put the number in I want to delete and hit OK. We can look at other ones. I can use this impulsive leg, X to A to B, B to C, saying it's cipher pattern all the way down to there, push all the way back up there, and oh bang, there you go. Oh, look at that. So before this trade even sets up, we have a cipher pattern which is already delivered. So it's using this impulsive leg back to there, down, and then it says entry here, which just stops up here, so a stop loss of around 34 pips, and you've taken to target 147 and target 278. So a good 1 to 1.5 risk to reward easily on this cipher pattern as well. And the last one we're going to look at is a New Zealand yen. Grabbing our harmonic trading pattern recognition tool, click draw, left click X to A. So this is going to be in color black. So we just ignore that one. I'll draw another one. I've changed mine on my chart to black to be white because I have a black background. If we go from X to A to B, B to C, it's still saying it could be a bat pattern, and it's got to come all the way back, snap here. So that's where we're going to be looking at. If I scroll down a bit, there's our stop loss, automatically puts it in for you. So if the price comes there, I'll be putting a pending order there. Stop loss, take profit, take profit. So thank you for that. That was week 2 of the Forex market review. We wish you all the best in your success. Take care.